Good morning and welcome to Kramer's Corner with Daily Technical Update. It is Thursday, the 18th of December. This video is for educational purpose only. There's no recommendation or advice whatsoever intended. It is purely to demonstrate how I try to read the market using technical analysis and my experience. Let's kick off with the semiconductor sector, illustrated by the SOX or the Semiconductor ETF from iShares. We had massive sell-off in semiconductors yesterday, 3% lower. Some semiconductors like Applied Digital down 11%, others 2, 3, 4, and 5%. A few were actually positive, but Nvidia was also hard hit, 3.8% lower, testing minor support there at 170 and a quarter. But negative sentiment has broken below 40 threshold and could drop lower in the coming days and weeks. And there is risk down to the 160, maybe lower, the 200 moving average coming up there, giving a little bit of a support. But looking back at the semiconductors here again, it actually the RSI closed just above 40 threshold, so that will be key to watch here the next few days. What will it do? Will it actually close above or not, or below or not? Micron was one of the that got also hit yesterday, but pre-market, after-market actually bounced a little bit, 230 now, and it bounced to 239 in the aftermarket. So that is a little bit maybe can bring some comfort to the hard hit semiconductor shares. On the overall market, it of course also dragged the overall market lower. Because Nasdaq 100 has a lot of semiconductors constituents. The Nasdaq 100 closed just around the support there at 24,652, but RSI actually closed below 40 threshold. So we are in a negative sentiment, still in the cloud there, still above 100 moving average, but very fragile at the moment. And pre-market, we have a little bit of a bounce, as we can see here. Here is the CFD just above the 100 moving average, just above the lower part of the cloud here in the future. You see the future actually tested the 100 moving average and the 61.8 retracement there. We need to adjust that a little bit because it's right there. Yeah, there we are, 61.8 retracement, 24,654. RSI actually is in a negative sentiment, but bouncing a little bit off there, down now. So what will happen the next few days? Will it follow through and really establish a bearish trend, or can it actually turn around a little bit? But for now, the Christmas rally is really not there this year. We have S&P 500 below 55 moving average, still a positive sentiment, but very close to the 40 threshold, and that it will be key to watch also. Pre-market here, a little bit of taking a breather there, just above the 55% retracement of this uptrend there for the future. Future is just also above the 40 threshold, so we still have a little bit of a hope. It hasn't turned bearish, but it is in, I would say, very cautious. It will be key to watch what will happen today, tomorrow, and early next week. But Santa is not really coming to Wall Street this year, it seems, at least not as it looks now. Then something really needs to turn around. The small caps, Russell 2000 at 38.2 retracement of this uptrend here, still above the cloud, still above 55 moving, still positive sentiment, but it's also a bit under pressure for now. We are actually in a larger correction. Hang Seng still keeping itself above 25,145. That is key support towards Nikkei. Bounced from the 786 retracement there at 48,702. Will it bounce here the next few days? 55 moving average still rising. Still positive sentiment on the RSI, bounced from the 40 threshold maybe tested a little bit during this during the dip this morning. So there's still a little bit hope also for the Nikkei, but if it moves back below 48,000, well, then we are into a bearish trend establishment. EuroStoxx50 sell off yesterday, not massively, but still lower yesterday. Still positive sentiment on the RSI, but these really bearish candles here that doesn't really gives me comfort. I would be very cautious and keep my stops tight because it's really under pressure. Here pre-market we can see we are bouncing a little bit from the 38.2 retracement at 5,607, just above the rising trend line. Sorry, the rising 55 moving average and the cloud area. So there's still a little bit of a hope for EuroStoxx50, but also here we have the DAX back below the cloud. Still positive sentiment, but it is not a comfort sight to see after it got rejected up here at 24,442. Pre-market basically unchanged, stopping there at the 38.2 retracement, but it is under pressure. There's a little bit of a hope with the positive sentiment still showing here on the RSI. On the FX market, a lot of volatility on euro dollar, but a bigger picture it hasn't really moved much. But an even bigger picture, we are actually in a bullish trend on euro dollar. Spiked almost up to the 786 retracement, just above the 118. So I think we could see market is getting thinner and thinner towards Christmas. I think it's still some volume rest of the week, but then I think a lot of traders, investors, they will go on holiday, and then it will become thin in going into next week and towards New Year, the next two weeks. So we could see a lot of volatility as spikes because less liquidity or volume can actually move the market. Still in a bullish trend above the cloud, positive sentiment, no divergence, indicating likely higher levels on euro dollar and taking out 118 and the spike up there, well then are likely moving higher. The sterling dollar taking a little bit of breather, but look at this. We have the 200 moving average rising. We have the 100 moving average rising. We are in positive sentiment. I think the sterling dollar will crawl higher in the coming weeks towards 135 and a quarter, where we have a little bit of resistance, but positive sentiment also supporting higher levels. Euro sterling, it range bound 88 and 87, needs to break out of that, and it looks like it will do it to the upper side because still positive sentiment on the RSI, above the cloud, above 55 moving average. But let's see. We need confirmation. That's how it works. Dollar yen bounced from once again 154.30 support here, just a tad below the 38.2 retracement of this uptrend there. If it takes out 156.95, well, then uptrend has resumed, and RSI is still positive, and there's still no divergence. This peak here is higher than here, and that's corresponds nicely with the uptrend there. So if RSI can get back above 60 threshold and first above the falling trend line, then followed by a move above 60 threshold, then I think we'll see bullish trend resuming. Euro yen has continue its bullish trend, bouncing from the rising trend line here, and pushed higher, and I think we could see it push above 184 and a quarter here in the coming days. If I was a trader, and I'm not in euro yen here, then I would have a stop at the lows from yesterday, because then we have a completely different picture. So that's how you can work with it. You use the trends correction levels. Also yen also bounced from just above the rising trend line there, and 50% of this leg up there, and then has bounced a bit. And I think we'll see uptrend resuming, despite the fact that we have a little bit divergence. You can see the RSI values declining. We have RSI, if it moves back above 60 threshold, which I think it will, then we could see uptrend continuing higher, and it is still intact. Unless it takes out the lows from yesterday, well, then we could see a setback down to 101.75, maybe lower. Sterling yen bounced also from the 61.8 retracement there, just above it, and I think we'll see it testing the peak there at 280 and 94 ish. If it takes it out, then we're looking at 210 plus, and then you can say, okay, we can guesstimate it by adding the Fibonacci to it. We are currently at the 786 retracement, that little correction there, and 210, 210 a quarter, 210.60 are the next levels to watch. Aussie dollar is still in a correction phase, and I mentioned yesterday we could see it dip below, and it was very close to the 38.2 retracement. Is that it? And then bounce. We have positive sentiment, no divergence on the RSI, and I always expected we will see a push up to 67, possibly higher. It's not that strong a resistance, it's just the peak up here, so there's potential higher. But let's see whether it turn around, and if it does, then you can, if we think it will do that, you can also work with it here, and then we can project higher levels towards 67 highs here. The dollar Canada pair trying to bounce from just above 137 and a quarter, 137.30. This support area here, it's fairly strong. RSI a negative sentiment, and there's no diversion, actually indicating we could see lower levels, and I think we will do it eventually. Just need a correction. We can see the 55 declining, the 200 declining, and the 100 also now declining. So, and we are below the cloud, and in the overall picture we are actually in a bearish trend. It's just a counter trend or correction that is looming at the moment, but eventually I think Canada will move lower. Sterling Canada, not exactly the same picture, apart from 55 moving average lower, the 200 moving average lower, and they're both declining. And in a couple of days, maybe early next week, 55 will move below the 200. They're both declining, and that is a sign of bearish underlying medium trend. Also negative sentiment still on the RSI. I think we will see it slightly lower in the coming future. The Euro Swiss can't really, I mean, a lot of dancing on the spot, and can't really make up its mind. Should I push higher? I mean, indicators telling me that we will see Euro Swiss pushing higher. It tries to do it, then it gets knocked down every time, and this, of course, the 200 moving average that declines here, that is dragging on a little bit. Still believe we will push higher, but if it takes out the supports around 92.88, so 92.85ish. If it takes out that level, then I think we'll see a bearish trend being established. Dollar Swiss. If we zoom out a little bit, it seems like maybe it's forming a triangle-like pattern that it's trying to get out of there, the lower rising trend line. 100 moving average and 55 moving average both declining, so the pressure is to the downside. And if it takes out 78.70 down here, well, then it has established a bullish trend. But for now, bearish trend, but for now, a little bit undecided. So I will wait for confirmation there too. Dollar index bouncing from the 61.8 retracement of this uptrend there. Could it bounce further? Well, the 100 moving average trying to push it lower. The 55 wants to go a little bit higher, but then we have the 200 there. So we are a little bit in a limbo, but negative sentiment indicating possibly lower levels. But let's see. If it takes out the lows from yesterday at 97.51, well, then we are looking at 96.84, possibly lower. But we are also in a correction phase, and we could bounce a little bit higher to 98.40, 98.60, to possibly the 61.8 retracement up there is not unlikely. Moving on to precious metals, and gold is really lacking the other precious metals that we're going to look at in a minute. We have the gold stopping there again. There is really some resistance there, and let's have a look at. We are there, 4,353.5. it really needs to take that out for a push above 4,400 and up to 4,500. Silver is really leading the way, pushing higher, new all-time high more or less every day, knocking on the falling trend line there on the RSI, so we are a bit stretched, but again, the trend is your friend and it seems to be continuing, but again, market will also become thinner and thinner, and silver is actually also more an industrial product. You need it in the technology sector, you need it in the semiconductor production, and despite the fact that it's so expensive now, you just need it. You can't produce without it, and it's just a fraction of the price of a semiconductor, but still you do need it. So moving on to platinum, also pushing higher, reaching 200% of this sideways correction here at 1975-76, spiking higher. We have maybe a bit of, and that is key to watch. I mean, we have this peak here on the RSI going back all the way to September, and we are just above it now. Will it stay above? And if it does stay above, it has cancelled this divergence there. So we are actually indicating for higher levels on platinum. You can see really massive move. We haven't seen levels this in a long time. We actually have to go back. Well, it's actually above the 2012 peak. We have to go back all the way to 2007, 8, 9, 10 to right there. So really a strong push. What are we talking about here? To 2008. So that is a massive movement. But there is potential higher, but be aware of a correction. And then I also want to have a look at Palladium. We haven't talked about Palladium in a long time, but it's also being dragged higher and, you know, pushing higher there. And there is potential higher also for Palladium, but despite the fact we are a little bit stretched now, but still there is potential higher. 1824, and also looking at the weekly here, I think I will just do this. You can see we have a kind of a rounded button here. So maybe we are building up for a big cup and handle, but there is potential higher in this region here above 2000. 2000, I wouldn't be surprised to see that being reached into next year. Copper, on the other hand, is not a precious metal, but it is needed in electrification. Dancing sideways with a bullish undertone. The 55 moving average helping it higher. It's only the 100 that is dragging on a little bit. So there's a little bit battle on the medium term, but I think we will see it pushing higher eventually, coming going into the new year. You can see here we are in a bullish trend on copper also. So metals really sought after that by the industries and speculators. Bounce in WTI crude oil, but for how long? We are still in a bearish trend. There's no divergence, but we could see, okay, a little bit of bounce from here to, oops, there we are. Catch it, there we are. Could bounce further up to 58.40 maybe, and if we measure the entire push down there, it is 50%, maybe up to 59.68. So maybe a little bit of a bounce, but we are still in a bearish trend on crude oil. Here we have the Brent crude oil also. We have the weekly. We can see also bearish trend. There is some lows here that could give a little bit of support down there at 58.40. But there is a risk further to the downside below those levels. Negative sentiment, no divergence, indicating lower levels. The EU nat gas, as I talked about so many times, there's risk down to previous lows there from last year, around 22.5. But it seems like buyers are coming in a little bit here, so keep an eye on that if you're trading nat gas. US nat gas, it seems to be bouncing, as we talked about yesterday, that it could from the 61.8 retracement there at 388 of the entire bullish push there. And if it moves back above 425, then I think we will see a uptrend resuming, or bullish mode resuming. So that is worth to keep an eye on also too. US 10-year Treasury yields, well, still below 420. It's spiked above a couple of times. If it takes out 421 or this peak, these two peaks here, well, then we're looking at 430. But for now, it is still a little bit under or sideways to the weaker side here. But 55 moving average turning around, giving a little bit of a support. The European yields also here elevated and still in a positive sentiment, a bullish trend. Correction could take it down to 280, but there's room higher, as explained by the RSI, still in a positive sentiment, no divergence. We could see it higher here, but for now taking a little bit of breather. UK, really not much to say. Is it forming a triangle-like pattern? Seems like it needs to break out of. Japanese rejected there at the peak once again, just around 198. But I think we will see it pushing higher in the coming weeks still. Bitcoin to the weaker side, as I mentioned, after breaking this flag-like correction pattern there and taking out 87.73. So we are to the weaker side, negative sentiment indicating lower levels. Ethereum also heavy, could test the lows here at 2,620. All right, that's all for today. Have a nice day. Keep charting out there and be careful if you're trading.